Darwin Platform group of companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Economics. On the show today, with hours left for the interim budget, the last one in the current tenure of Prime Minister Narendra Modi's government, we focus on some of the critical points as far as the budget agenda is concerned. And in fact, just days ahead of the interim budget presentation, the Finance Ministry on Monday released a report saying that the Indian economy is projected to grow at more than 5% in the coming years on the back of a robust financial sector, structural reforms, the demographic dividend and advancements in technology. The report has projected an optimistic growth trajectory with the country's GDP, according to the report, expected to more than double from $3.5 trillion in 2022 to $7.3 trillion by the end of the decade. As of January 29, the Indian economy was reported to be at 3.7 trillion, a marked growth from its position as the 10th largest economy a decade back. And given that there is considerable potential, according to the report, for the economy to continue to grow, perhaps at 7% and above, I am joined by a panel of very senior guests and experts: DK Joshi, Chief Economist at CRISIL; Saugata Bhattacharya, one of the senior most economists in India; Siraj Hussain, former secretary in the Ministry of Agriculture and a person who knows the agriculture pulse and the agri-economy perhaps best in the country; and Narendra, Taneja, noted energy expert. Thank you very much for joining us. I gave you a quick rundown of the Finance Ministry's projections. Remember, viewers, this year there is not going to be any economic survey, which is basically a report on the previous 10-11 months of the economy. There was just this small report, and that sort of sets in a bullish tone that is likely expected as far as the interim budget is concerned. There is also expectation that there will be some announcements. Remember what happened in 2019, where crucial announcements also included a hike in the standard deduction for income tax, as well as the launch of a very important scheme for farmers. On that note, I'll come to you, Mr. Hussain, first in terms of your budget expectations. It is interim, but the agri-economy perhaps needs continuous support, and nothing is interim about the agri-economy. What would you suggest should be the key focus as far as the farm sector is concerned?
Thank you. I think instead of expectation, I would call it my wish list. And I have already written 2 articles on this subject. So the top of my wish list is the government's recognition of the fact that the northwestern regions of India, consisting of Punjab, Haryana, Western UP, Uttarakhand, are facing a climatological crisis. And unless that is handled well in time and handled well, we will have difficulty in meeting the targets of our food production. So some kind of consensus with the state of Punjab is needed as to what is required for persuading the farmers to grow less paddy. So that is my wish list number 1. And my second item on the wish list is some kind of very positive announcement to how to take away such a large number of people who are today dependent on agriculture for employment, some 45% people. That number has to go down, and for that the employment intensive sectors like textiles, leather, handloom, etc. have to be given a lot of priority.
Okay, Mr. Hussain, that's an important point. Before I go to the economists, Narendra, I'm coming to you. The energy sector and we have clearly seen that as far as the public is concerned, there's been a reform of sorts, which is prices have not increased. Retail prices have not increased for quite some time now. The budget isn't related to fuel prices, but in that backdrop, and given the fact that there are elections ahead, can we expect the budget to prove to be an instrument of change as far as fuel prices are concerned and its consequent impact on helping soften inflation further?
Well, Siddharth, as you know that petrol and diesel, commodities you're referring to, these are kind of deregulated commodities. So government ideally should have no role in determining the prices, but we all know oil world over is a political commodity and India is no exception. But as the reports, as you know, point out two important areas. One is, of course, this report is talking about geopolitics. Global geopolitics as a major factor in terms of energy prices, whether domestic market or externally. And B is also talking about, as you know, the energy transition. So there is a huge pressure at the same time, both on the government and the petroleum and natural gas sector. On the one hand, they have to make sure that commodities are available at affordable prices and have a conversation with the government on that. And at the same time, to make sure that, the energy transition, which means that, moving away from fossil fuels, as you would recall the, COP summit in Dubai, that those targets announced by the governments are also met. So I think huge pressure in terms of, on the one hand, climate, at the same time, energy prices, commodity prices, post-Ukraine and now post-Hamas in Israel. So it's extremely complex. But I think so far, the way these companies have handled the situation, the government has handled the situation, has benefited the Indian economy. The fact that despite criticism from the West in particular, Indian refiners have been importing crude oil from Russia. And that has been a major plus factor in terms of overall, not only the balance of payment or the fiscal deficit or the growth of economy, but overall has been a big thing for the Indian economy. And that you can see the benefit of. Ordinary consumer has benefited from it, industrial consumer has benefited. But just the last line I want to say, Siddharth, is very important, that despite all these factors, I think the very fact that Indian refiners, they have improved their bottom line, their financials are better than ever before. At the same time, they have provided the needed cushion to the ordinary consumer. And my reading is this is likely to continue until the elections. And don't be surprised if petrol and diesel prices and LPG prices come down a little bit before the elections.
Okay, that last line was something that was anticipated and expected, but the government seemed to discount that. Viewers, food for stomachs and fuel in the tank. We have dealt with these two because these are immediate pressing concerns. Now let's take stock of the macro picture and go back to what the finance ministry has said. 7% GDP growth, DK Joshi, and the fact that the ministry report believes that there is scope to grow well above 7%. And given the other estimates, including that of the RBI, what do you think the finance ministry, this analytical report seems to be pointing as far as the growth part is concerned?
Well, I think for fiscal 24-25, I think we are a little lower than what the report is suggesting. We expect around 6.4% growth, which is in itself quite high. And the reason for moderation would be global slowdown, and also I think RBI has been raising interest rates, and the objective behind raising interest rates is to slow the economy to control inflation. I think that's how it works. Now, I think from the medium-term perspective, the report highlighted that we can touch 7 trillion by end of this decade, which I think is feasible. Our own calculations show that if economy grows at 6.7% per annum till the end of the decade, you will cross 5 trillion in 27-28, and you'll hit 6.7 around that trillion dollars in 3031. So I think the trajectory is dependent on how much you sustain growth for for how long, I mean, so to say. So you need to run a growth marathon at around 6.5 to 7% per year for next 7 to 8 years. I think you will cross $6.5 trillion in your sights. I think what will also happen is because GDP is growing faster than your population, so per capita incomes will also rise. An equivalent calculation is that from per capita income of about $2,600 per person right now, you will hit about $4,500 per person, which is the upper middle income from the lower middle income country. So I think these are calculations based on the projected rate of growth. And I think they're not, they're little optimistic than what we have done, but I think they're directionally, I think we are on the same direction as the document released yesterday was pointing out.
Saugata, do you share that optimism? Because I must also point out to our viewers that a dollar figure for India's GDP is a bit of a difficult thing for a professional economist to talk about, because you don't know what the exchange rate will be a month down the line, forget what it will be 3 years down the line. But leave that aside, Saugata, do you share the optimism that the Finance Ministry report paints just ahead of the budget?
Thank you, Siddharth, for having me on your show. So I agree with Mr. Joshi that I think there are grounds for optimism, definitely. The report, as your viewers would probably know, points out to the key factors that have led to this resilience of growth, especially in a global environment where global growth is struggling to reach even 3%. So if we can actually grow 7.3% in FY24, that's good enough. So whether it be, I agree with Mr. Joshi that probably 7% in an environment, global environment with growth is likely to be even slower than in 2024 growth. So maybe that 7%, but we can push it, a little bit. So 6.5%, 7%, that's feasible. I think the budget will project a nominal growth, real GDP growth plus inflation of again around about 10.5 to 11% that we had seen for FY24. So that is feasible. But together with one of the key reasons that I think that growth can probably inch towards 7% is the series of FTAs that we are likely to sign on the global front. And the fact that we are beginning to explore new products, new markets will boost the growth coming in from the domestic market, exploit a little bit on the reopening of the global markets. So I think overall, a 6.5%, 7% growth is within reach. There's no doubt about that. The key point is to be able to grow, as Mr. Joshi also mentioned, sustainably at 6.5%, 7% for the next 10 years. That is the difficult question, and that needs to be addressed through policy measures.
No, that's a great point there. And what Saugata is basically saying is that trade and enhanced trade with other economies across the globe will be a key element of this ambitious growth desire that we have. Mr. Hussain, how important is the agri-economy to this kind of growth aspiration? Because the word used in the report is aspiration. How critical is it? And do you think in the current scheme of things, the agri-economy can play a significant role to fulfill this kind of growth aspiration?
See, agriculture and rural economy is very important because a vast number of people are dependent on agriculture for employment. So Mr. Joshi was talking about the real per capita income. If we see the data of last 9 years, the real per capita income has grown by 37%, while the real wages of agricultural labor have increased by just about 4.6%. So growth is taking place. GDP is growing quite fast. As an economy, we are doing very well, but a vast section of our population is not actually able to realize good benefit from that growth, and therefore the growth of agriculture sector is very important. For that, we need investment by both the government and the private sector in agricultural infrastructure. If our agricultural exports, for example, have to continue to be beyond $50 billion a year, then a lot more investment is needed in the marketing infrastructure. We have seen very good investment decisions by the government in ports, roads, etc. But agricultural infrastructure...
May I interrupt you there? Mr. Hussain, may I interrupt you there? Because you touch upon a very important point, and this point came out in a previous show that we did, where experts like you on an infrastructure discussion pointed out, and it's a fact, that most of the heavy lifting as far as infrastructure development in India, and the point that you were just making, has come from the central exchequer and to some extent from the state governments. The private sector is still very, very cautious when it comes to infrastructure, having burnt its hands in one round ago. In agriculture, would it be right to argue that with the stepping back on the farm reform bills that happened, or the fact that we do not have any major massive private sector investment that I have heard of, for example, in the recent past, agriculture will continue to remain one of the most unreformed areas? Is that assumption correct?
You see, I do not want to go into the merits of the farm laws because people have written a lot about it, but it is true that we need a lot more investment by the governments, and even if the center has not been able to reform agriculture marketing, surely the states have the full powers to reform agriculture marketing in their own states. But you see, reforming of agriculture marketing is one thing, and investing in improving the infrastructure is another thing. For example, how many APMCs in India have the facilities of testing for residual limits of chemicals and pesticides? The residual limits are going down in EU and other countries. Even in the Gulf, the residual limits for rice, etc., are going down. So our agriculture, farmers, and the supply chain has to address these issues very in time so that we can export the surpluses we produce.
Narendra, Taneja, before I go to Saugata, I want to ask you this question. Do you, in your view, see any prospects of the private sector stepping in, not in infrastructure alone, that is a previous discussion, but for example in the agriculture sector? And is this the biggest government, the reform of our agriculture sector, which could not happen due to various well-known issues, is that likely in what markets expect to be a third term for the Modi government?
Well, good question. You see, I heard Mr. Hussain very carefully, and I agree with him 100% on, particularly on Punjab and paddy. Is a very, very critical factor. I mean, though this agriculture is not exactly my domain, but I do follow it very closely. But you see, I think the agri reforms, the government will need to bring them back one way or another. We can have more conversation with the farmers, especially in Punjab and western part of UP, etc., and maybe with opposition parties and various state governments. But we need them back. I can't see actually India getting into $7 trillion economy without those reforms. How can we get there without reforming the agriculture? Without reforming, making sure the agriculture is kind of reformed into a world-class, enterprise for the farmers across the country. So I think we will need to, what I hear from my own sources is that that's very much on the radar of the government. You may change the name, you may change the color, you may change the flavor, but one way or another, those are going to come back. That's my sense, because the government
come back when?
Those in the government and in the ruling party I interact with, they know it very well. That we will not be able to reform India's, rural economy without bringing those kind of things, into mainstream for the farmers. Why do you want to exclude them, those people? So I think probably the last time, maybe the government didn't do it well, maybe it was not well communicated. But as far as the goals are concerned, very clear that, my sense is the government wants those things back.
Narendra, Taneja, one quick follow-up, because you understand the political economy very well. The Ram Mandir is done, Article 370 is done, there is talk of the Uniform Civil Code and other associated things. Is the agri-sector reform still seriously on the agenda of the government of the day? We understand that it can't happen before the general election, but can we seriously expect it afterwards?
My sense is, the answer, Siddharth, to your question is absolutely yes. My sense is you will see major reforms in the first 2 years, when the government returns for the third time. And one of the areas which is going to be the focus area is agriculture. It probably would be done in a different way. Maybe initiatives will come from various states, BJP ruled states first, and then basically you will go for a national conversation, and then it will come. The color will change, the flavor will change, things might change, but I think the end result would be the same. It's very clear that you cannot really take India to where you want to take it to Atmanirbhar Bharat, Viksit Bharat by 2047 without agriculture. If you leave agriculture behind, you are leaving practically 70% of India behind. And no political party which is which has got a very clear vision for 2047 with the milestones can afford to do that. So very clear on that. But Siddharth, very quickly, one point. You see, I think, it's of course one can argue that, but aren't we already kind of the third largest economy on PPP? Second thing, that with the report which has pointed to very important areas. One is geopolitics. It's important for us to keep an eye on what is happening in the Middle East. Middle East is practically economically integrated with our economy. At the same time, very close eye on China. China economy is in deep trouble because the president there is prioritizing, Communist Party and Marxism over economic, development. It might have its own consequences for the entire Asia, and that would include India as well. Third, very important, is part of the same thing. You see, a de-dollarization and at the same time de-globalization. These are the areas we need to keep a very, very close eye on. And those have been pointed out in the report. I think 3 areas pointed out include, of course, AI, where everybody's talking AI. But my sense is we need to focus on Middle East and China very, very closely. And energy transition, we have to make sure energy transition happens in India on our terms. We write the grammar, we write everything of that. If we do it exactly the way the West wants it, we will go wrong. We should not disrupt 100%. I think energy transition and geopolitics, 2 areas very important for us as far as the global vision, economic vision for 2030 is concerned.
Saugata, do you share Narendra Taneja's optimism? And I'll add to that a bigger mandate, a more resounding mandate for a third term to Prime Minister Narendra Modi could finally mean that the heavy lifting that was aborted on the agriculture side will happen. And I also want you to answer your expectations as far as the private sector involvement is concerned, because if you take a more holistic umbrella view of the entire economy, the government has got bigger. Sector after sector, the government continues to stay there. Aviation is one honorable exception. But even in digital, for example, the building blocks are still being set up for the public infrastructure and are being run by the government, which is a good thing. But for agriculture, for example, do you see a change with private sector involvement in the years ahead?
Boy, Siddharth, that's a solid list of questions. So it'll take a whole show to move through some of these issues. But I find one of the key things that I noticed from all my co-panelists is the importance of coordination between the center and states, and I'm not just talking about agriculture, in each and every area now, that if we need to accelerate our growth sustainably over the next 10 years, it has to be done with an incredible coordination between the center and the states, because the states are the bottom line for where growth will emanate from. That's number one. In agriculture, there's it's not just agriculture, and as the report also points out, with the increasing use of mechanization, automation, new technologies, etc., there is a real fear, and as the IMF paper has also noted, that this will lead to significant displacement of labor. And labor in agriculture, as Mr. Siraj Hussain knows very well, that there is a significant amount of disguised unemployment in agriculture. So that will be exacerbated with the increasing, whenever you try to increase productivity in agriculture through mechanization, improved seeds, etc. And now with the increasing use of drones. So that will lead to a displacement of labor, and there has to be a watershed in which a capture area where this labor can be absorbed. Very, very important. On the use of, on the entry of, corporate farming is already inching ahead. We know that. Particularly MNC companies, etc., who are sourcing for the fast food and other for the restaurant chain. But this needs to increase. So one of the key areas of the last set of farm reforms was exactly this. And I think a large part, if we are to move up the value chain in agriculture, is this increasing discrimination. By that I mean the need for storing, for sorting, grading, etc. so that high quality, so that prices can move and give additional prosperity to farmers. That's something which is very, very important. There was an attempt some time back to increase the role of the FPOs, the farm producer organizations. That doesn't seem to have taken off. So I think, with my limited knowledge, I think these are some of the key areas that are needed for improving agricultural productivity, which is quite low in India. But other than that, across a broad spectrum of reforms and activities, the center-state coordination has to be refined and has to be delivered for the last mile to move the growth trajectory up.
Well, on a lighter note, Saugata, and to all our viewers and the rest of the panel, I wonder if you've seen a viral video which shows a robo produced by a leading company which is farming, but that's a completely fake video. Viewers, don't get misled by that, but that is, of course, underlines the concerns, the fact that it's gone viral, it's being spoken about, it's being commented upon, is a matter of concern in an economy like India. Mr. Hussain, before I come to you, I want to go to DK Joshi. Mr. Joshi, let's also look at the broader impact of public finance and the aspiration that India has for the kind of growth that has been outlined. In terms of public finance, not in the interim budget, perhaps not even in the full budget, but at some point, is there a new deal that the central government should try and attempt, a GST-like reform of public finance, and how much the government wants to spend and how much it wants to borrow, and also then get the states to go down that path, Mr. Joshi?
Well, I think I would agree to that. See, the point is the fiscal management of the government post-pandemic has been reasonably good, actually, and they are on the glide path to 4.5% fiscal deficit by 25-26. And their strategy was to focus more on on creating infrastructure. That also seems to have paid off. Now, I think what they'll have, because they have to reduce the deficit, they'll have to take the pedal a little off the capex side. So I think they will have to get the private sector to take the baton from the government. So that transition has to be managed. And private sector, as you were pointing out, I think is waiting for a pickup in investment, not this year, but for the last 10 years, actually. I think there's been no meaningful pickup in the private capex. And here, I think some signs are there that it is getting broad-based, but I think you need to make the environment a little more friendly so that you can take advantage of the conditions like higher capacity utilization, PLI scheme, or for that matter, the healthy balance sheets of the corporate to translate into more private investment. So I think it's also about ease of doing business, which I think, if not the interim, the final budget in July can focus on. So my sense is that from public finance perspective, I think government has to be on the path to reduction of deficit because for three reasons. I think number one is that our debt to GDP ratio is among the highest in the similarly rated countries. Second, I think with the inclusion into the JP Morgan index, I think fiscal scrutiny will from the FIIs will increase. And then finally, I think a lower fiscal deficit will also allow the government, the RBI, to reach its 4% medium-term fiscal inflation target with ease. I mean, so I think fiscal consolidation has to be there, and it has to also be coordinated well with the states. I think some steps were taken in the previous budget in the sense that they gave some grants or reform-based grants to the states to push investments up. I think something of that sort will have to continue, and I think we also have the new Finance Commission, so we'll look forward to what it suggests.
We are coming to the end of the show, but before I do that, I'll try and go across my speakers, and I'll start with you, Mr. Hussain. One of the key expectations is a further enhancement in the PM Kisan Nidhi. You will also recall that the free food program, which was supposed to be a closed-ended program, is now being extended further. Do you think the PM Kisan Nidhi expansion of that is required at this stage, and if it were to happen, what kind of impact will it have?
On PM Kisan, my view is that it needs to be better targeted. Right now, all the landholders are getting the same amount. Now, is it possible by using DBT tools to give a higher amount to farmers in the rain-fed areas, farmers who do not get the benefit of MSP? We keep talking about these things, but we have not done anything to actually target a higher amount to such farmers who are not benefiting from MSP operations or who are not having irrigated lands. So something like that I would like to see. It is difficult, but this government can surely do that.
Okay. Saugata, you want to add to that point?
No, I mean, I'm quite, I mean, from the, other than the farm, which is one of the farmers' agriculture, finance minister has herself noted 4 key priority areas: youth, unemployment, farmers, and agriculture. So she's already noted that. So, but I think it's still manageable within a certain limit. I mean, the fiscal amounts are still manageable that is needed for the subsidy for the Kisan Yojana, Farm Kisan Yojana, and the Free Food Yojana. So it's still sustainable. But again, as Mr. Joshi pointed out, now that we are integrating in the global financial space, there will be increased scrutiny. And again, as I pointed out in a show before, the amount of interest that we are paying on debt is really, really taking away from the center having to invest in more long-term meaningful development like healthcare, education, which is the key driver of increasing productivity in the system.
Absolutely. Narendra, Taneja, the final word on the show to you today. Prime Minister Narendra Modi once famously, and that too went viral, had spoken about the Revdi culture. The imperative of politics and the fact that once instituted a subsidy like the free food program also is very, very difficult to roll back. Some of the reform steps and needs that we have spoken about, I want you to end the show with a response to this question. Forget some of these bigger reforms. Can some steps be expected that the welfare state does not completely go out of hand both at the center and the state level?
You see, Siddharth, look, I spent many years in Europe and I know welfare states, what it means in Germany, Sweden, and Norway. We cannot really go by the same yardsticks in a country like ours. I mean, I have serious objection to call it free food. There are brothers and sisters. If some of us are doing better, economy is like we're talking of $7 trillion economy. And if we feel that, look, they're vulnerable to hunger, vulnerable to poor healthcare, vulnerable to all those kind of things, it's our duty to go and do whatever necessary. Whatever economists may call it, I mean, I'm an economist myself by training, but I think we should ignore it. It's important we take care of them. And I'm happy that the Prime Minister in particular focuses on that. It's nothing to do with elections. It's more about the people, our own brothers and sisters living in those areas, in very vulnerable economic conditions, in some cases social condition, they are protected. Number 2, the point is whosoever needs some kind of hand-holding from the government or support from the government, we must do it. When the Prime Minister talked about Revdi culture, that's a Revdi culture that why should people like me and you in Delhi be getting subsidy on power? That's Revdi, or what is happening in Punjab these days. Those who can afford, those who are driving in expensive cars are getting subsidy. That's Revdi culture. But so I think it's important for our economists and the politicians too and the media to make a very clear distinction what is Revdi. That is Revdi. But when, for instance, a farmer in Uttar Pradesh, Bihar and Orissa, a vulnerable family gets some support from the government, that's something is their right under the constitution, and me and you happily should contribute to it without complaint. But I think it's important what the Prime Minister said. Revdi culture is what some political parties are doing. I'm sorry to say, including the Congress party. That must stop. It needs to be defined that what's happening there. I mean, people like me are offered subsidy by Delhi government. What kind of cruel joke is this? That's Revdi culture. For what? For votes. That must stop, and I think we must loudly speak against it. That's the Prime Minister did. But in terms of those who really need our help, because they are very vulnerable, because they need to kind of, take care of their family so that they have a little bit more support, we must do that and we should not call it any kind of free. It's not free. They are brothers and sisters. Somewhere they are also contributing to our well-being, our comfortable life in cities like Delhi and Bombay, with air conditioner running in all rooms, and even our pets enjoying air-conditioned comforts. I think we need to be careful.
Absolutely, and there is no argument against that. But it's also very clear, viewers, from this panel, and you can sense that mood, not just with these experts, but many other experts that I have been talking to in the run-up to the budget. Three things are pretty much certain. One, a third term for Prime Minister Narendra Modi, and therefore a significant set of expectations that some of the things, particularly on the economic side, which have not been done so far, which are either not attempted or possibly not fully implemented, those will be focused on right away after the election. That's expectation number one. The second expectation very clearly is the agriculture economy continues to need a new deal, and that's the nature of our agriculture economy for various historical reasons. And the third point is, how long can the government of India continue to invest in infrastructure? At some point, the private sector also needs to step in. And then there are, of course, a host of issues, but the bottom line, as has been set in the debate in the run-up to the budget, is what the Finance Ministry has said as far as our growth is concerned. 7%, viewers, will be a world attention-grabbing headline as and when it is announced. There is still some way to go, but hopefully we will get there. I want to thank my entire panel for their time with us today, and you, the viewer, if you've been, thank you very much for watching. We'll be back with more. Until then, goodbye.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now.